So joining me now to talk more in depth about the Chinese economy is Rachel Ziemba, senior analyst at Roubini Global Economics. Thanks so much for coming in, Rachel.
Pleasure.
So rising wages in China, really a big part of the story in that country.
Oh, I think so. I mean, and I think this is another sign, of the costs that Chinese manufacturers and foreign companies operating in China are facing. One of the things that came out of the PMIs this morning was actually that the rising input costs, and this doesn't include wages, but steel and all of these commodities that manufacturers are buying, they're going up. That index climbed fairly dramatically, and they're not able to pass on those higher costs to their to their end buyers, whether it be in China or elsewhere. So I tend to think of these rising wages as part of a long-term story we've been seeing over the last 5 years. China's labor force is peaking, and this is going to be and also, we're starting to see more job opportunities in some of the medium-sized cities within China, not just on the coast.
So is this the beginning of the end of the Made in China era?
I think it's a shift in the Made in China era. We're still seeing companies operating in China. We're seeing a number of companies, even in the service sector, deciding to increase some of their hiring in China, financial services and others. I tend to think this is an important potential first step of rebalancing of the Chinese economy. I think it's worth noting, even in manufacturing, that all sorts of global automakers have been looking to China to increase their production. So I think let's not sort of count out Made in China at this point, but I think it does. China is facing moderating growth at the same time that the growth conditions in the U.S. are looking very bleak. Europe is starting to slow down after sort of a one-quarter wonder in Germany. And so this is a very difficult environment for policymakers.
Now, you mentioned financial services companies, and Citigroup has announced that it's planning to triple its workforce in China to as many as, 12,000 over the course of the next 3 years. What do you make of that development?
Sure. I mean, I think it's part of we've been seeing more significant growth in the service sector. That's obviously a plus for those who are looking to Chinese to consume more and wages to rise. I also think it's a plus given that Chinese college graduates have tended to face significant difficulties finding jobs. They have high unemployment rates. And China, of course, has been trying to lure back overseas educated Chinese to work on the mainland. But again, I think we have to sort of look at this as being a slow transition. This is not a shift to the service sector, is not going to happen overnight. We're not yet seeing strong signs of rebalancing domestically. Investment is still driving the economy.
Right.
And as long as it is, and as long as U.S. consumers aren't going to be there to be the consumer of first and last resort, I don't think the Chinese consumer is ready to pick up that
So this is
yet.
not something that's going to happen overnight. Still a great deal of time before the Chinese consumer really emerges to have a significant impact on the rebalancing of the economy in that country. But fascinating to see how rising wages are impacting on the companies which are moving their factories away. Foxconn, for example, is moving more and more factories, I think, to the north and west of China. Is that trend likely to continue?
I think it's likely to continue. One of the challenges in the north and particularly in the west is that despite this big infrastructure push of the last few years, it's not yet as easy for companies to source all of their goods, and you still have, we still have a number of backlogs. I mean, we only have to think early last month to hear about the multi-day traffic jam to note the fact that there are still transportation issues, and that's one of the reasons we tend to think that some of the infrastructure investment is productive. It is needed for China's long-term growth. So the important thing for domestic and local policymakers will be making sure that they have the systems in place so that the companies can not only find the workers but access the goods they need to do this. I think what's interesting in talking to people that have factories in different parts of China is looking at whether in these different areas they have what's necessary to operate.
And Rachel, I wanted to ask you about General Electric planning to shift some of its production from China back to Kentucky. A remarkable development, is it not?
Definitely, and I think this is also showing some of the tax incentives and the fact that wages remain so depressed in the U.S. It's interesting. Also, there was some news a couple weeks ago that some of the call centers, for example, in India, are being shifted back to the U.S. as well for somewhat similar reasons.
Yeah, shifting sands.
So we shall
Rachel
see.
Ziemba, thank you so much.